Lisa said it. Fed officials wondering out loud, are we restrictive enough? Do you think they are?
Yeah, I think the narrative, how it's moved to rate hikes, is interesting to me because if that's true, you're effectively setting a new indoor record for Fed policy. You go back and say, if they hike rates again, they will never have cut rates. So what's the longest distance of time from one rate hike to another? We know what that is. It was 2015 to 2016. It was 12 months. I don't think any of us are calling for a rate hike in July. So if they hike any time after July, then it's another new record for distance of time from one rate hike to another. It seems implausible. And then I go back to something else. We look at the summary of economic projections, the nefarious dot plot. The highest dot ever for neutral policy, the median, was 4.25%. And then if you get to the extremes, it was 4.5%. That's 2012. So over the last 12 years, no one on the Fed has ever believed that rates had to be higher than 4.25%, maybe 4.5% as a long-term neutral rate. And here we are, 5.25%, 5.5%. I put those things together. I can't really believe that we're going to see anything approaching a rate hike over the next year.
You've been constructive, and constructive for a while. Last time you sat in that chair, I think you said this is the most bullish we've been since the mid-2000s. Is that still the case?
Yeah, very much so. The more we look at this, the more we see this playing out like 1995, which is the one soft landing anybody could have lived through and worked through. And I remember that like it was yesterday, because the first quarter of 95, everyone only saw demons. You had U.S. Steel default, you had the tequila crisis, you had Orange County default. You had problems with the securitized markets. I think at that point, GE had bought Kidder and was solving for that by liquidating it. So lots of problems. Nonetheless, we had a soft landing. The Fed came in July and started cutting rates. They did 75 basis point in rate cuts, and then they took 25 of that back a year later. The markets did great from 95 to 98. And by the way, inflation 2.5% to 3% during that period. So you can live with slightly higher inflation and a slightly higher Fed funds rate.
So you think the Fed's still going to cut 3 times this year?
Not so much today. I don't think that. Not so much.
So how much would they have to cut to continue to feel bullish and the most optimistic that you felt going back 2 decades?
So here's what I struggle. I gave the very elaborate narrative on how rate hikes can't be possible because it would be a new record. If they came back and cut at year end, that's another new record. So no matter what they do, they're going to set a record, because the longest distance of time from last hike to first cut was 2006-07 in there. It was 15 months. So you're looking at a record one way or another, so we're in uncharted space. I think the Fed wants to take the edge off of things. There are still frailties out there. You've had a 525 basis point rate hike. It's created a vulnerability in the system. You're seeing it in the consumer through housing. Housing affordability is the lowest on record. You're seeing it in the ongoing reconsolidation of the commercial property market with office buildings. They're trading at 60 to 80% below their original appraisal. And you're looking at C&I loans, you're looking at businesses that are funding themselves at 11, 12%, and a few years ago were funding themselves at 5%. So that weakness is there. I think it's slowing things down. It's slowing things down a lot more slowly than we anticipated, but I think we'll get there towards year end.